I mean, I think that even, we also didn't touch on with the bank statement loan, there's also properties that are, people who are looking at potential STR properties that are great properties, but because they're rural, there are not a lot of comps for the DSCR loan, right? So let's say, you wanted to do a DSCR loan, and let's say for this example, it wasn't a rural area, but the property doesn't debt service, okay, for whatever reason. Maybe you're gonna do some upgrades, maybe, you have some ideas of, whatever you're going to do the property to create a great STR with good cash flow, but it does not debt service. You can use the bank statement loan to qualify in that case instead of a 0 DSCR.
Right, and that's gonna give you much better terms.
Much better terms, 1% better in interest rate on average. Lesser down payment, lesser prepayment penalty.
So let's talk about how does one qualify for a bank statement loan for an investment property? Like how do you underwrite a bank statement loan?
So either 12 or 24 months bank statements.
Okay.
We're going to look at both options. 24 months is a more favorable options as it relates to terms. So a longer window of time looking at the bank statements and the cash flow gives the lender a better feeling of the actual cash flow than 12 months, although we can do both. And we're going to look at all of those deposits on those bank statements, and then we're going to use an expense factor. And that's the income. That's how you qualify the income.
So in other words, for the bank statement loan, we're just going to do a historical look back on either 12 or 24 months worth of bank statements, and we're going to analyze the cash flow and use that as your qualifying income.
That's it.
And then on an investment purchase for a bank statement loan, can we use the proposed rental income on the subject property to supplement anything as far as, like, let's say the bank statements, there's a DTI component to the bank statement loan, right?
Right.
And let's say with their cash flow and their bank statements, their DTI was just a little too high.
Sure.
Can they use the income, the proposed income from the subject property they're buying to help them qualify?
Absolutely.
That's great.
Absolutely.
That gives them a lot of latitude, and at the end of the day, it's about options.
Yeah.
As a consumer myself, I always like to have options. I hate when I run into a situation and there's just one option. I don't know if the pricing is good, and I don't have anything to compare it to.